Hi guys, Callum McLean here, and I'd like to welcome you to this Facebook Live session on how to know what to do and when to do it. I'm going to be your trading mindset coach all week, if you allow me. What it means is you understand, or what I'm trying to teach you is that everything to do with trading is all about mindset. If you've got the right mindset, then everything's going to go according to plan. If, however, there are certain things, certain issues you've got within yourself, they'll get transformed and they'll show up in your trading. So everything I'm showing you is about how to sort out your trading mindset. It's like basically all the tips and tricks I'm giving you, they're systems or techniques or bits and bobs to do, but it all goes back to your mindset. This is how it's going to help you to behave how you should in the markets, for want of another word. Because let's face it, most of the time it's our behavior, it's our mistakes that are causing us to fail. Trading is fairly simple. When it's going up, we buy it, and when it's coming down, we sell it. It's what goes on up here that tends to make the difference between whether you're going to be successful or not. So how we left yesterday, well, let's go back. Monday, start of the week, we created a simple system. All I did is I looked at moves that I wanted to get into, and then it was like, is there a signal that I can take that's going to get me into those moves? So let's just remind ourselves of that. Let me make this smaller so we can see. You don't want to see too much of me. Let's have a look. Stick that in the corner there. So this was the trend tracer going long. 50 needs to be above the 100. That's our trend. That's telling us, right, we're in an uptrend. And then we're looking for the start of the pattern, which is a high formed. That's position 1. Then we're looking for a higher low, because obviously there'll be a low down here. So this is a high low, that's number 2. But what we're looking for is 3, is to, instead of pushing on like you would in a normal trend, it forms, and then it says, right, we're starting to make a retracement on this trend. If you understand that the market waves, you have an extension, a retracement, an extension, and a retracement in an uptrend. Obviously, that's reversed in a downtrend. So position 2 needs to be lower than position 1. Position 3 needs to be higher than position 2, but lower than position 1. Position 4 needs to be lower than both 2 and 3. And then we have position 5. Position 5 just has to be above 4. It doesn't necessarily need to be lower than 3. So it could be, the same height, it could be slightly higher. What we're anticipating is 6 being a higher low than 4. Again, I say anticipating because as soon as this high is formed, which is 2 candles to the right, that's lower, we put our entry in 3 pips above and our stop loss. 10 pips below. Now that's, I plucked that number out of my head, but as I was doing the back testing yesterday, I actually found that it's better if we do 6 pips below. So I will get around to changing that rule. I did quite a bit of back testing yesterday just to have a look at it and see what it's like. So that's going to be where we're at now. We're going to change that stop loss to 10 pips. So what I might as well do is actually we'll show you the short as well. So it's the same principle, just reversed. So the short, first we need to know that we're in a downtrend. So the 50 needs to be below the 100, and then we're looking for the market to make a low. This is normally after a long extension. You have a long extension, it makes a low, and then we're looking for the head and shoulders pattern. So that's the retracement and then the continuation. So 2 will be higher than 1, 3 is lower than 2 but higher than 1, and 4 is higher than 2 and 3. And then of course 5 just needs to be lower than 4. Doesn't need to, it can be same as 3, a little bit lower. And then all we're doing is we're anticipating the turn of 6. So we put our entry in 3 pips below 5 and our stop loss 6 pips above 4. Yes, I will get around to changing that. Slight oversight on my part. So what I did then yesterday is, remember I said that I wasn't going to do sit there and go through all the back testing with you, because 30 trades takes a long time. So basically I did the 30 trades and it came back with 24 winners, 6 losses, which I thought was quite good. Now I'd done that with Aussie CAD, Pound USD, and then I did look at Euro JPY, but the Euro JPY, it didn't work at all. I scanned through the charts and I can only find one occurrence where it actually happened and worked. So that is why this keeps distracting me. Let's move that to here, because then I keep my eye line with the camera. That helps. So that's why I took Euro JPY out of the equation. You've got to remember that not all systems are going to work with every pair. That's where a lot of people trip themselves up. They'll back test on a certain currency pair and then just presume that's going to work on every pair going forward. I always like to back test. Morning, Andres. Hi, thanks for joining. I always like to back test each currency pair, at least with 30 trades, and then that gives me an idea. So Euro JPY is definitely one we're going to be steering clear of. That didn't work. So based on that information, I knew Aussie CAD was working, Pound USD was working, so the next one I went for was Aussie USD to see if that worked, and I back tested that. So after the 30 trades, we got 24 winners and 6 losses. So I thought, well, I might as well continue backtesting the Aussie USD, because then that will give us 3 currency pairs for us to look at going forward, because I won't start trading a currency pair until I've tested it. So as I test a pair, I'll add that into the mix that I'm allowed to trade. And then we came up with a total of 35 wins, 10 losses, giving us a ratio of 0.78. So for me, that's good enough. I now understand that there is a potential for this system to work as long as we can trade it properly. So obviously the next thing we need to look at is creating a routine and a checklist so that we can actually make sure that we are going to be trading this correctly. So what I've done is I just quickly created a checklist. Now we know from our rules that we need a position. It's got 5 phases. So we need a position 1, a position 2, position 3, position 4, and a position 5. And then when position 5 is formed, then we can place our pending order, place our trade. So what I've done here is it's just a quick checklist. And what this does is it keeps you on track. I know it sounds very easy, but what happens is it actually makes looking at the charts a lot easier when you've got the numbers. Because when I look at Aussie CAD, I go, right, so I know that I've got position 1. So the next thing I'm looking for is position 2. Have I got position 2? No, not yet. Bang, that's it. I've looked at that currency pair already. That's how quickly trading should be. Aussie USD, yesterday, before I went to bed, I had position 1, 2, 3, 4, and 5. So I placed the pending order. Obviously, we can cancel that now because that's, I accept those terms and conditions. This is only a demo account. When I first start trading a system, I'll always demo trade it first. And that's just to get into the practice of trading it properly. Because that's, like I keep saying, that's where people will make lose most of their trades, is the mistakes they make trying to trade it. So what we need to do is do a few trades in the demo account so that, right, yeah, I'm getting my pending orders in the right place. I am trading this correctly. This system is going to work as long as I do. So what we see now is we've made a lower low here, and then we've made a higher high, and we've now just crossed over on the EMAs. So what we do there is we move number 1 up to here, and then number 2, number 3, didn't want to place that order. And then what this does then is this is letting me know what I need to do when I look at this currency pair next. Because I've got this checklist and this system put in place, I now know when I look at the charts, I know exactly what I'm looking for. I'm looking to see for 2. So 2 is a low below number 1. So if we get another candle to the right here, that's a low formed. I can then put 2 onto here. And that's what we're trying to do. We're trying to make it very, very simple, because when you're trading with your own money, you'll find it stressful enough as it is. The last thing you need to do is make things complicated and start, especially when you've got money in the market, is to start looking at the charts thinking, right, what do I need to do? Because what will happen is you'll start to make emotional decisions rather than logical decisions, because your heart will be pumping because you'll see your money's going up and down, or you might have had a couple of losses. So you've got that little bit of doubt in your mind. What you need to do is set up checklists and routine so that you can come to the chart like this and go, right, I know exactly what I'm looking for. I need position 2. And then we just go on to the next chart. Pound USD, we've got 1, 2, 3, 4. Although these are pointing up, the 50 is still below the 100. So it is technically still in a downtrend. If that pushes through, we'll just move them all out and start again. So if I take you back to the checklist, what we've got here is Aussie CAD. We've got position 1 formed, but there was no position 2, so we're not doing anything. Aussie USD, this now has changed. We've got position 1, so we change this checklist. So we now know, right, we're looking for position 2. Put that back to NA. And then the pound, what do we have on the pound? Let's have another look. The pound, we got 1, 2, 3, 4. So go back to the checklist. And we got 1, 2, 3, 4. Yeah, so we're looking for 5, or that could just completely change. And then what you want to do on here is put the times you're checking. Obviously, if you've got a position 4, then you're going to be wanting to check quite regularly. But if you've only got position 1, I mean, let's have a look. How long will it take to get to position 2 there? And we've got 16 candles, so that's 8 hours. So that gives you an idea of how often you should be looking at the charts then. So you know that you can leave it another 4 hours before going to have a look. Just because you're trading on the 30-minute chart doesn't mean you have to go back every candle and have a look, see what's happening. You know you've got a good chance that nothing's going to happen in 4 hours. And in all honesty, even if it does, that's only position 2. You know, you could probably go away from the charts and come back the next day, and maybe it would have, you know, got up to position 4, maybe even position 5. You put the order in. You'll start to learn that as you start to progress with the system, as you use it more often. Obviously, when you first start out, check it every couple of hours, every 4 hours, until you start to understand how often you really do need to check it. But if you can understand, the reason that I'm doing these checklists is taking your decisions out of the market, because that's when you make bad decisions. That's when everything becomes, you know, you get emotionally driven, because either fear or greed will take over, and that will start making your decisions for you, when really you need to be taking every decision through logic. If you take your decision through logic, that means you'll be following your system. And if you're following your system and you know it works, you're going to be making money. I mean, that's the idea of it. So when I first start out, you take a look at what you want to trade, what you're trying to achieve. You set up your rules for getting in, the back test on those rules. Let me see if I can find. I'll show you the back testing I did, because I take screenshots for all of my trades. Let's have a look. Very sorry. All right, there we go. So I take screenshots for even on the demo, even on the back testing, because the other advantage of this is when I'm looking at the charts, trying to decide whether or not I'm seeing the right pattern, whether or not I'm, you know, am I making stuff up? I've now got 45 screenshots to go and have a look through, because you know I've taken all these screenshots and I can say, right, you know, does this look similar to the one I've got? In this one, just happens to be a loser. Obviously, there's your position 1, and we're in a downtrend. Position 2, position 3. Now, this would have been position 4. That would have been position 5, but it took out the high. So then all we do then is that position 4 gets moved over. Then obviously that candle there confirms the low here, so that becomes your position 5. Put your pending order in, entry, stop loss, didn't quite make it, and that was a loser. Find another one. So there we can see you got position 1, position 2, position 3, position 4, position 5. As soon as you get your position 5, you put your entry and your stop loss, and then let the market do what it's going to do. You can see it takes us in, teases us a little bit, goes to the stop loss, and then goes up. Now, another thing you might notice is at the moment, I'm just doing 1-to-1. What that will do is it will give you a higher win rate, but then it does actually reduce the amount of profit you can make. But when you're first starting out on a system, like I always say, start with simplicity. Once you've got the hang of it, then yeah, feel free. You can start to look at different ways to make more money, because there will be times when you can get 2-to-1s, 3-to-1s, maybe even 4-to-1s out of these. But to begin with, get the confidence up, get the 1-to-1, get the wins under your belt, and then start to think about how you're going to progress on and try and get as much money out of that market as you can. So that's pretty much where I'm at. So what we'll go on to tomorrow is the journal. I've sort of got it started up here, ready to go. What I'll do is I'll take you through, obviously, why we journal. I know a lot of people like my FX book and things like that because it does give you quite a lot of detail. But there are certain things that it doesn't give you and doesn't tell you, especially to do with your emotion and your feelings. And that might sound a airy-fairy to some of you, but once you start to get into trading and you start to feel the emotions, you'll get what I mean. I know when I first started trading, I was a typical man, you know, like a construction worker. You know, feelings. My dad had taught me you don't have feelings, you don't feel pain, you don't show emotion. So of course, when I first went into the market with my own money, and you see your money going up and down, the feelings I was getting, it was like, oh my God, I've never felt this before. What is this? What's going on? You know, I thought I was going mad. So it wasn't until I started to look into mindset and started to understand more about myself that's when I realized, so this is what emotions are. This is what they're all about. And then obviously you've got to be like, well, I can't be trading through emotion. I've got to be trading through logic. So that's why I'm very write my rules up, get your trading checklists and routines. I know what times I need to be checking the charts. And then when I get to the charts, I know exactly what I'm looking for because I have everything set and structured. That's what works for me. And if I'm honest, that will probably be what works for 95% of people, because the 5% that are already trading and earning money, they may not do it. They may never had to have done it. Some people are, you know, they're brought up with the right mindset. They've got the right money mindset, and they can make a go of trading. The rest of us, we have to find ways to conquer our mind so that we can make money. And this is the perfect way. So what I'll do tomorrow is I'll take you through the journal. I'll show you why it's important and how the different things are going to help you, A, get more money out of the market without having to do any more work, and B, keep control of your emotions, and also find out maybe you've got gut feelings that do work and gut feelings that don't work. I mean, it sounds like a strange thing to test, but when you journal, you can actually test this. I went through for a long time thinking I had this fantastic signal that was, you know, the best signal in the world. I thought I was the king. But when I actually started journaling and looking back, it was like, oh my God, I've been trading this signal for a year based on one win. It was a 13-1 winner. It was a big winner. But what happened is that imprinted in my memory, and that was my only memory of this signal. But what actually happened after that was every other one seemed to lose. And I'd taken 40 or 50 trades thinking, my memory's going back to the 13-1 winner. I'm going, yes, I'm going to make money on this. And it took me 50 times of losing before I started journaling and wondering why I wasn't making money. And it turned out I had, I think I maybe had 2 winners overall, but I had 50 losers. So overall, it was a losing trade, a losing system, a losing signal. But I never would have found that out had I not journaled, because our memory is not as good as what we think it is, people. Trust me. It distorts things in the favour you want it to be. So you've got to understand that you may think your memory's perfect and you remember everything perfectly. You don't. And if you start to get a bit into NLP or come on our course and learn about your actual mind, you'll start to understand that memory is very, very poor. Everyone's memory is very, very poor of situations and experiences. You may be able to remember the FA Cup winners from years ago, or all the teams. There is certain knowledge you may have, but memory in regards to events, situations, how they happened, who said what, that gets distorted over time. A lot of time, a lot of distortion actually, and not so much time. Basically, in about 30 days, your memory's shot. So anyway, that's distracting a bit. So come and join me tomorrow. We'll do the journaling, and then what we'll do from there is I'll show you how we record everything, how it's going to make a difference in our trading, and then we'll take it on from there. And then obviously on Friday I'm going to be doing the Q&A. So if you have any questions, you can start getting them in now. Email me. I'll put it up in the comments. So let me do that now while I think of it. So that does mean I'm going to have to do the talking and typing, which confuses the hell out of me. Right. So if you've got any questions, feel free to email me, or if you're on my Facebook, message me, whatever. And what I'll do is I'll answer them on the Friday when everyone can hear. I'll do it on video, because that way, if you've got a question, guarantee somebody else is thinking the same thing. So if I can answer you, then I can answer for a lot of people, and we can help people. So if you've enjoyed what you've heard today, please give me a thumbs up and a like. Remember I said to you before, Facebook algorithm works by the more engagement you get in the video, the more people it will show it to. So obviously for me to help more people, I need you guys that are watching to give us a thumbs up. Hi Rob, thanks for joining. Give us a thumbs up, mate. That would be really appreciated. Give me a like. If your finger wants to keep pressing the button, I'm totally okay with that. Yeah, laughing, smiley faces, that's cool as well. Thank you very much. So hopefully you'll be able to join me tomorrow, and we'll go through the journaling and how that ties everything together. And I really need to stop saying a lot. I'll practice on that, and I'll see you guys tomorrow.